So into the charts we go, folks, and we do see Bitcoin making a nice little push. It briefly touched a new recent high, and again, you could see right here, right? So remember about 4 or 5 days ago, we had this pop. It retreated really quickly. It then continued to go sideways, and again, that was actually a little bit of a nerve kind of issue, meaning that it potentially saw the probabilities of a breakout lower themselves. Now, it was still more than 50%. We talked about yesterday being at 65%. And as of now, it looks like that 65% is winning out here. Now, again, will we make one final push up to 25,000 and change? And again, we can see this pivot high right here and this low. That would be my hope. And I say that because obviously we have a Bitcoin position that I would like to exit if we hit that range. So let's see if we can get there. Nice little potential breakout. I say potential because, again, I want to see continuation. All right, so you got the close here. The first close, if you look at all these highs here, that actually closed above that line. That, again, could be the beginning of a breakout. Now let's look for follow-through. Can we get above 24,000, above the high here from the last 24 hours, and then continue to push up towards that 25,000 marker? Now, a couple interesting things here. You're seeing a bunch of other altcoins starting to hit major resistance. And what this tells me, by the way, is that we're in that final kind of thrust in crypto before a bigger pullback. So again, needless to say, if we go to Ethereum here, we have a nice move up, but we know that this hit this pivot point basically a week and a half ago. It still may go up and touch this upsloping trend line. I've talked about that line being major versus this flat one is only minor. So it wouldn't shock me to get through just a little bit. But ultimately, I do think that, again, at this stage of the game, basically you're near or at the top on Ethereum. And again, I do still think you could maybe push up to about 1700, 1710. But once we get there, again, that would be what I would assume would be the top based on the charts. Again, my average price 1606. I actually noticed that the open positions hadn't been updated since I added to that position. I think it was about 2 weeks ago, but obviously it did get updated. I talked to the support staff that's updating that and made sure that they got that in correctly. So again, we're in at 1606 on our short. It's a 3% position in the portfolio. And again, what I would say to you is if we get to 710, 715, I will be looking to add at least another 1.5%, maybe even a little bit more to that short. All right, and again, I also, as you saw, added to the Solana position. Take a look at Solana here. And again, Solana briefly went above this high pivot, but look at the level we're basically coming into. This low here, this low right here, that was the breakdown point, and we're now back to that level. So again, resistance remains just under or right around 27. I wanted to add to that position, give us a good dollar cost average there on the sell short side. And then ultimately, if we do continue up and we see this pivot high to this pivot high, the next add would be around $28, give or take just a few pennies there. Now, as I've been warning you, and I said this yesterday in the video, I said, listen, if Avalanche pushes up into this area right here, I'm going to take a short. I said it just needed to go back above 21, and that's exactly what it did today. So at 21.05, I issued the short alert on Avalanche. Only a starter position, 1%. But again, the idea being is that if we get one more move up into this level, I'll definitely double up on that and raise the stakes there on the short. Okay, so again, notice how as we're seeing a little bit of a move, and this is how you need to manage your money, right? You don't go all in at any one level. You inch in to positions, then you inch out, and then you start flipping it on the opposite side by inching in on the opposite way, right? So as we've moved higher, we've been unloading longs. And again, granted, we still have Polkadot on the long side, Bitcoin on the long side. But if we get a little higher, then I'm going to be exiting both of those. And then notice how we're slowly inching into shorts now as we get long in the tooth on this risk asset rally. And again, just to coincide this with the January effect. Remember, coming into January, we talked about a rally in crypto. Now, I didn't necessarily know it was going to be as robust as this has been. This has been a tremendous rally. You know, you can see Avalanche from $10 all the way, basically 100% move. If you look at Solana, it went from $8 to, what, $26, $27. Even Bitcoin's had a very substantial move for Bitcoin itself. But the bottom line is, once you're out of January, and we just have a couple more days, that January effect is going to start to fade. And I do think that with the Fed on Wednesday and earnings for big stocks, which will influence the risk on trade, and also the jobs report on Friday, these are factors that make the market on very shaky ground. Now, keep in mind this factor, and this is the biggest one. The Federal Reserve does not want crypto to rip higher. They don't want the stock market to rip higher. They basically want risk assets to go sideways or down. And after this big rally, they're going to come out with harsher statements on the state of inflation and what they're going to do or keep interest rates at. All right, that is what Jerome Powell has said in the past. He's not going to change his mood or his verbiage, because essentially the higher risk assets go, the richer people feel. The richer they feel when they see their investing accounts go up, they're more likely to go out and purchase things. That creates an issue with the demand side getting too robust, and obviously pushes prices up. So there's an incentive for the Fed to keep markets and asset prices on the lower side, because it will keep inflation under wraps. All right, and you're still, even though inflation has come down tremendously, you're still elevated above that 2% level that the Fed wants us to get underneath. All right, quickly going to Polkadot, which is still one of the long signals. I still think there could be one more final move up in Polkadot here. This would be a very, very pivotal level right there. Let me get rid of that arrow there and this up here. But basically what I'm looking at there is that point of interest right around 740-ish, give or take. There's a little bit of another level around 793, and then obviously this one here. But also there's an upsloping trend line that I think we do want to take note of here. We could also connect this right through. So again, it kind of gives us a secondary level right here and even right here. So I would say first big level, again, 735 to 740. Second level is going to come into play around 790, and then the next one would be a pierce of $8. And again, I would say that maybe we get up to this $8.30 level, but that would be the highest that I could see this going. So again, just becomes a matter of dissecting the risk reward as it pushes up, or if it pushes up, about how long I want to keep the Polkadot trade out there. Interestingly enough, if we look at the percentages, we can see that my crypto account is still 33% long, 25% in Bitcoin, 8% in Polkadot, and now I've inched up my short side to 6% of the portfolio. So again, what you should expect is if crypto goes higher, we're going to be reducing our long exposure and increasing our short exposure, right? So again, the long will go from 33 down, and the short will go from 6 up. Whether it gets to 10 or 15 or 20, we'll have to find out. But again, that is what we're looking to do. Okay? Let's go to a couple of the other charts just to kind of keep them in the zone. Again, here's your Binance chart. Binance up a little bit, but this is still your resistance point, this down sloping trend line here. So again, that I do think is major resistance on Binance, BNB. If we look at a couple others, let's take a look at Ripple. And Ripple, again, interestingly enough, is just hovering right at this down sloping trend line. We'll see if it can get its mojo and bust through. Taking a look at Cardano. Cardano continues to move up. If you want to short Cardano, this is your zone. I may pull the trigger myself if we continue up, but we're looking at resistance around 42 to 43.5 cents. And that will be a huge level because it's the down sloping channel trend line as well as this flat top right there. Remember, the methodology dictates when you have two intersecting levels within a very tight distance, there's going to be a more major resistance. It's kind of like, putting up one wall, which is hard enough to break through, but what if you put up a double wall? It's even harder for price to get through that level. All right, taking a look at Polygon, which is Matic. Let's see what we got on that one. Matic, again, still holding above this downsloping trend line. We noted this level as resistance. That would be a potential shortable level for me. And the reason I say that is because it's not just this pivot top, right? You also have to bring this trend line back. And what you can see here is pivot low, pivot low, pivot low, breakdown, retrace to the scene of the crime, retrace again. That will be some resistance in the short term. Okay. I am looking at Litecoin as well, LTC, for a potential short. Again, basically, you got very close to my groove right here. You can see it basically kissed the line. The reason I didn't pull the trigger at that line is because you have the even number of 100. There's a tendency for assets to break key levels briefly. And so what I would like to do is see one more push up on Litecoin, pierce $100, and then I would consider taking a short on that one. Okay, we already talked about Avalanche, Tron, nothing there, still hasn't gotten high enough. Uniswap, let's take a look at that one. See what we got on this one. Yep, Uniswap just consolidating, resistance is here. In terms of a short, I'd probably be looking for up here, so it would need a little bit of a bigger move to get me involved there. Let's see what else. We can look at Cosmos, ATOM here in the top 25 or so. That one is hitting resistance. I don't feel comfortable enough shorting because of the consolidation, but again, that is resistance there on ATOM. Chainlink, take a look at this one. Chainlink, again, has had a nice move, but again, still not up here. And by the way, I want to just point something out to you. You have certain cryptos that have rallied about 100% off of their lows. Obviously, Solana's gone more, but remember, Solana got beaten down on the back of FTX, but Avalanche up 100% and some others. Chainlink, on the other hand, only up about 50% off of its lows. Now, again, does that tell us something? Well, usually the ones that are weaker, they will pull back. So just be a little careful on something like that. It would also insinuate maybe a good short, but it's not even up to this level here yet on Chainlink. All right. We can look at Monero real quick, XMR. Let's see what we got on that one. XMR is actually trying to break above this level. This will be your resistance here at around 207 to 208. Let me just see here. I'd have to do some research to see if that's going to be another resistance level to short. I'm just looking for secondary trend lines that would intersect it, and I might have just found one right here. So again, take a look at this. Pivot low right through here, and then hits right here. And look at how those two levels coexist pretty much within a couple dollars on Monero. So again, that could be a good shortable level. So the bottom line is there's definitely some trading opportunities. If we can continue up, we'll be absolutely swing trading this. And remember, swing trading involves both going long and short. And I love that. All right. The fact is we can make money on the long side. We can make money on the short side. Then we can go back long again and make money that way. It's the beauty of trading the charts. And there's so many people out there that fall in love with, assets. I know people that fell in love with Tesla, and they were buying it at the, 52-week all-time highs, and then basically dropped 70% off of those highs. I know people like that in Apple. I know people like that in Bitcoin and other cryptocurrencies. They fall in love with something, and I always say this to people, is that always remember an asset is not going to love you back, meaning that it's not going to care that you bought in and you love it, and it's not going to be like, oh, well, I have to go up because this person bought in and they love me. It's going to do what it's going to do. So I always recommend never falling in love with an asset. It is there for you to trade it. It is there for you to make money off of it, get rid of it, enter back in, get rid of it again. You treat it as an asset, as an entity that is there to make money. The second you fall in love with something, that spells doom, in my opinion, at least on a swing trading basis. Now, listen, you're going to hold something for 20 years? Okay, then maybe it does fine over 20 years. I don't like holding assets for that long because I can make 10 times, 100 times the money by swing trading the interim ups and downs in a chart. But again, I think, that's the only reason. If you're ever going to fall in love with something, you just got to be saying, okay, listen, I'm not going to look at it for 20 years because ultimately, the same people that were buying at 65, 69,000 on Bitcoin, even saying, hey, I'm going to hold this for 20 years, then they panic when it's at the lows and they end up exiting the trade in panic when they see an FTX situation. And that can be the undoing of these investors, and it is the undoing of these investors. All right, you guys have a wonderful rest of your day. Let's see what this market has in store for us tomorrow on this busy economic news, Federal Reserve news, earnings news week in the markets. It should be fun. You guys take care.